today we are talking about real estate, something Barbie knows a little bit about, huh? Real estate, Barbie's dream house must be expensive. Malibu Barbie, all these Barbies. Barbies have money to live that lifestyle that Barbie lives. And if you want to be boss Barbie like me, or have your dream house, your dream property too, this is definitely a segment for you to pay attention to. And what we found out recently, we probably knew this already, but now it's been confirmed. Young professionals are buying more real estate and driving up the market. And that's according to data from the Realtors Association of Jamaica. So Vice President of the RAJ, Gabrielle Grant Gilpin-Hudson, and branch manager at JMMB Bank, Owen Ferguson, join me now to dive into the findings. Hi.
Hi, Kalila.
Gabrielle. Hi, Owen. How are you guys?
Hi, Kalila. Hi, Gabrielle. Doing well.
You need to call me Boss Barbie. Stay in character this evening. All right, so let's talk about this report, Gabrielle. Tell me, what has the real estate market been like this year based on your observation?
Sure, and maybe what I can do is contextualize the data to just explain where it comes from. So the Realtors Association of Jamaica is an association, a professional association of realtors that are the custodians of the multiple listing service. So that's what we call the MLS. And that listing service essentially is what realtors use to input their listing data, sales and rentals, and that platform collects different data points over time. So it's important to note that the data that we have and we have shared for the purposes of this evening is that data set of the transactions that take place on the MLS. So there are other transactions that would be taking place that are not necessarily captured in the data, but this definitely this represents all of the transactions that would have been taking place through the MLS and through realtors. So I just wanted to clarify that. But yes, Kalila, the data speaks for itself. The real estate market is changing.
So how many transactions are we looking at since the start of the year, and what value are we talking about?
So definitely the transactions would be in the hundreds, approaching thousands of transactions so far. And the value of it is in the billions. It changes obviously from day to day. And what we are trying to do as an association in collaboration with other entities in the industry is develop ongoing statistics for the real estate industry so that we can be able to share more accurate data and information points like this with the public. So that we can actually have the information, because information is power as it relates to those specific numbers that you're asking me. So I can't give you specific numbers is the long story short to your question, but definitely the transactions that we would have seen for this year are a bit less in number and less in value than even the year before or the year before that. So we are seeing the market slow down a bit.
So I'm looking at some of the findings, and these numbers are striking me as, but let's just look at the numbers. So it says, according to real estate brokers and financiers of home purchases, the current functional definition of middle-income residences relates to homes priced within $15 to $25 million range, while high-income residences are priced at $25 to $45 million. Those numbers sound on the low side to me, unless you're talking about outside Kingston.
They definitely are. They definitely are on the low side, Kalila. So that's another thing that the industry in general is working on. So if you were to ask me what is considered a luxury property, what is considered middle income and high income, there are no agreed upon benchmarks that all of us would say.
25 million is not a luxury property.
Yeah, no, it's not. Because, if you look at some of the developments right now, you're looking at, in some of the very built up areas in Kingston, up to like $45 million for a 2-bedroom apartment. So, it depends on the perspective that you're looking at the market from. So definitely, and it's exciting for us at the RAJ, we're working towards kind of standardizing these reporting statistics so that we can all be able to benefit from definitions like what is middle income, what is luxury, etc., etc.
So where is most of the demand coming from? In which segment? That middle income, the luxury? What is most of the demand?
Sure. So I would say definitely, and this is generally the case in Jamaica, you will see the highest volume in properties that are underneath about the $35 million range, right? So in that market segment, properties move and they tend to move pretty consistently, regardless of whether the market is up and down, because that is, I would say, the area of the market that has the most effective demand. So, you have demand and you have effective demand. And the effective demand is definitely concentrated in those areas. Not to say that we don't have activity in the luxury markets either.
Well, let me get Owen's perspective here too. So which sector are you seeing the demand, Owen?
Right. So we happen to be in a fortunate position in that we at JMMB are seeing a pretty healthy demand right across the spectrum. And in fact, contrary to perhaps the general trend elsewhere in the marketplace, we have actually seen an uptick in demand and inquiries and applications and actual book transactions at JMMB Bank. We are seeing an uptick versus 12 months ago, for instance. We are up over 30% above 2022 at this point.
Wow. So any idea what's driving that uptick in demand?
So for us, clearly we are, so there are some dynamics that benefit us that, I leave others to draw some conclusions on, but we continue to be pretty competitive in the marketplace. And I think there's an appeal, especially to younger persons. We've conducted a couple of surveys in the market, and our feedback tells us that our young people naturally want to be able to purchase their first home. And we're getting a lot of those queries, and we're supporting them all the way through the process. So I suspect that's where the greatest part of the demand is coming from, or young professionals in the, say, 25 to 35 age range who are earning at the level that would afford them one of those properties that Gabrielle just spoke about, up to 25 million or up to 35 million, as the case may be, depending on their particular circumstances. But we are seeing, and we're grateful for it, we are seeing an increase in demand for these loans.
Okay, so just give me a second because my camera chipped out. All right, camera is back. Had to run over and go fix the camera, but here I am now. So, all right, so define what young professionals is actually, because you said you're seeing the demand coming from that side. Young professionals are trying to buy their first home, but define who young professionals are. Like,
so for us, there's a right. So we emphasis on the young part. So we're talking about people within the first 5 years of employment, usually about 25 all the way up to about 35. We see persons acquiring their first home. Usually by the time you get to about 35, 40, you would have been in your home for a bit and perhaps looking around for an investment property. So we're seeing some demand in that space as well.
Gabrielle, are we seeing any particular income groups as well, any particular professions, industries? Because a lot of young professionals have also been complaining that the market has priced them out and they can't afford these homes. But you guys are saying that, no, you do have a lot of young professionals who are actively buying homes this year.
You do have a lot of young professionals buying homes, Khalila, particularly because what I think a lot of financially savvy young professionals may come to appreciate is that when you are able to take out a loan with some institutions up to the age of 70. So the earlier that you were to purchase your first property is the longer you would be potentially able to have to pay back a mortgage, which means that your monthly payment might be lower. And so you can probably afford to borrow more when you're younger, if you're making the requisite amount of income. So I think that is one of the reasons why persons, particularly in that sweet spot of around 30, approaching 30, just a little bit after 30, are buying so much with mortgages, because really that's probably the best time for them to buy. The longer you wait to take out your first mortgage, the less number of years that you're able to get, which does impact your monthly payment amount and your ability to qualify for that loan, of course. So I think that is definitely one of the reasons why you would see young persons kind of propelling the market. Also, generally, as Jamaicans, it is a standard culture for us to believe in buying over renting. So a lot of persons choose to buy if they're in a position to buy. whereas persons will rent until they're able to buy. So I think that kind of contributes to, young persons kind of coming to the market as well. And then lastly, a lot of persons, as we get more financially savvy because I really do see a push across Jamaica where even from your show, persons are taking financial literacy more seriously. People are looking at, boy, how can I invest? How can I grow my wealth? And, one of the tried and true areas of growing wealth is through real estate. And so you see persons having the interest in buying properties for investment purposes, whether that is for long-term or short-term rentals, or even sometimes in certain instances, some capital appreciation through buying, holding for a while and then selling back.
But anecdotally, it feels like the average age of first home purchase has risen, because we feel like looking at where our parents' generation was compared to where our generation is right now, our parents were able to afford homes at a much younger age than they are now. Is there any data on what that average age of first purchase is now compared to what it used to be?
And, the truth of the matter is that there is not. So, in my capacity as Vice President of the Realtors Association of Jamaica, right now, one of our initiatives is collaborating with other institutions in the industry to try and pool all of these data points together. So the real estate industry right now is very much analyzing it is like an art, and it's not as much of a science as we would like it to be, because there's all of these different data sets. So you would have our MLS data, you would have the mortgage data from our friends at JMMB, you would have NLA, National Land Agency's data, and you have data coming out of other agencies as well, whether that is Statin, etc. So what we really are trying to do is start this initiative of having more information on these market segments, data points, demographic information, income information, demand information, so that can be readily available. Information is power, and it can kind of help us to look at and analyze the market over time.
So, Owen, what types of properties are most in demand right now? What are these young professionals buying? Apartments, townhouses, homes?
Yeah, we're seeing a good mix. We're seeing apartments, we're seeing houses, especially those fixer-uppers that are coming in at bargain prices. We're seeing some townhouses on the upper end of the scale, and we're also seeing persons buying land and with the plans to build later on. But let me just add something to the conversation earlier, which you spoke about, what could be driving some of the increased demand from younger folk. And that is that we are seeing an increasing demand from young people with multiple sources of income. We're finding that people are employing themselves in multiple ways. They have a day job and they have one or two side hustles. They are formal and informal. And so what you find is that many of our 25-year-olds come to us with applications showing 2, 3, 4 sources of income. And it puts them in a position to access greater amounts, one, and qualify much earlier. And for an institution like us, JMMB Bank, which, we do exercise some flexibility around our terms, we are open to those additional sources, not the traditional sources, salary and pay slip and so on, but we're able to take your data, whatever source your income is, legitimate, of course, and able to put that together and present an application that can be approved. So, we are open to those types of non-traditional sources that many of our younger clients are proposing to us, and we're happy to bank them, sure.
So that's how they're doing it. Side hustles, multiple streams of
Whatever
income.
gets it done.
That's the secret. That's the trick. But realistically, how much do you need to make? First of all, let me take some comments, because there are a lot of comments in the chat about the people who are able to afford these sorts of homes. So Shelly Ann says, so y'all saying Jamaica market is the complete opposite from the rest of the world. Okay, no problem. I'm moving back home. Roger says, which young professional is buying up all of these houses? Because I'm young and I can't see the money to buy any house, and I'm a middle class income earner. I need a new circle of friends.
He should be talking to us.
Says, I've So Sean has the opposite experience. Sean says, I have met young professionals in their 30s who have multiple properties in Kingston and the North Coast. So Roger, you need Sean's circle of friends. And then Shelly Ann again says, is young professionals are buying up all this real estate. How are young professionals complaining that they can't afford NHD houses? So realistically, Owen, like how much money do you need to make in order to qualify for, say, a $30 million mortgage?
Yeah, so again, it's so many factors involved there. You've given me the sum involved, but also things such as their age. So if we're talking, let's go back to our 25-year-old. If we're talking about a 25-year-old who has 35, 40 years to retirement, and it's important to say that we assess persons to their age of retirement, not to a fixed number such as 65 or 70, but depending on the industry you're in, if you happen to be self-employed, for instance, we are able to go beyond the traditional limits in order to facilitate longer repayment periods up to a maximum of 35 years. So they're able, if they're able to convince us, with the data that they're able to present, that they can in fact afford these mortgages, then absolutely we're happy to do them. To your question specifically, the whole business of where these properties are or where in the marketplace they are finding them, they are very often just outside of the KMTR, just outside of the corporate area. With the highways and so on, we're finding people who are commuting daily to areas such as Old Harbour, as far as Maypen, and potentially with what is happening with the highway, we may very well be seeing people commuting from as far as Mandeville into Kingston. Of course, if it is that we're able to pull some of these folks into our space for financing, we can point them as well into developments happening in those areas. So, we are open to doing transactions wherever you are in the island. We're open to all proposals that we are seeing developments all over the island, and we're funding them.
Now, Gabrielle, one of the hindrances to home ownership has been coming up with that deposit. I know the banks have gotten a lot more flexible with how much they're willing to accept as your deposit. Are we seeing that homeowners, new home buyers, are still going with that 10%, 20% down payment, or are we seeing those numbers come down where more owners, more new buyers are opting for the smaller percentages, the 5%, and sometimes in some cases the 100% financing that some institutions offer?
Right. Well, I would say that generally, from a realtor perspective, I have seen where deposits generally have stuck for the most part to 10%, with the deposit being even more if it is a pre-construction property in some instances. But what I would say is that, there is the freedom of contract principle. So persons are sometimes able to find vendors who are willing to take a lesser deposit based on, advice that they may have received from their attorney.
Okay, well, before we wrap up this segment, what are the hottest areas to purchase real estate right now? Our viewers want the tips. We want to know, where is my property value most likely to appreciate? Owen, what are you seeing? Okay,
so, there's an interesting comment earlier about the Jamaican market behaving a little differently from elsewhere. We are seeing demand in places such as St. Thomas with what is happening with that development, with that road out there, that highway that's under construction. We're seeing quite a bit of activity in that space. Gabrielle and her team can tell you a little bit more about that. We're seeing demand out in Old Harbour, just outside of the Spanish Town area. And so, again, because transportation and our commuting routes have improved quite a bit, we are finding persons are more open to take properties outside of the corporate area, and in some cases the demand and supply dynamics force persons into some of these communities. But those are also good value properties, so we're happy to support those as well. Outside of those two growth areas, at the upper end of the marketplace, we are seeing North St. Andrew continues to be strong. I mean, we're seeing new construction in some of these areas.
Meaning Upper St.
And we're
Andrew?
seeing,
We said North St. Andrew. North St.
yeah,
Andrew is
so
Upper
we
St.
do
Andrew.
serve the full range of the market. So yes, yes, we're seeing demand there as well.
I heard the North Coast is quite robust as well.
It is, especially with the Barbie dream houses, Kalila.
Lots of investment properties going up in the North Coast, the Airbnb market driving demand over there. And I saw the recent report from the BOJ showing Portland, St. Mary, St. Anne, St. James, Westmoreland, basically the whole North Coast. The only one I didn't see on the list is Trelawney for some reason. But yeah, a lot going on in that area, lots of demand. So thank you guys for joining me. Thank you, Gabrielle. Thank you, Owen. I have one last question for Owen, and this one is from Elaine, who wants to know, if you are living overseas, can you get a loan from JMMB to buy a house in Jamaica?
Short answer, yes. YES with a capital Y. Yes, we do finance quite a bit of our diaspora market. Wherever in the world you are, we can support your acquisition of a home in Jamaica. Yes, absolutely.
Okay. Thanks again, Owen. Thank you, Gabrielle, for that enlightening conversation. We're definitely going to keep paying attention to the real estate market.